Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 25th of January. So as we start this first week now of Mr. Biden in office, we're likely to hear a lot more detail about his plans and what he intends to achieve in his first 100 days in office. This week is relatively light on the fundamental schedule, so nothing sort of massive due to hit the news wires this week. Although today there is a big focus on euros. The euro's actually sort of taking up all of the bandwidth today from the fundamental data slate. Before we dive into the markets, I just want to give you a quick update on Wednesday's live trading sessions. These are hosted on YouTube as live streams. You can join us free of charge. It's 9 o'clock London time, and the link to sort of schedule that event and join that event is in the detail underneath this newsletter. So let's take a look at the markets here. So when we come to the US stock markets, the question is the Dow going to follow suit with the S&Ps and the Nasdaq? So the Nasdaq extremely bullish. It's certainly benefiting from the sort of tech boom at the moment. The S&Ps also sort of following suit. The lagger out of these tends to be the Dow at the moment. Now the markets no doubt have had a huge success and a huge run here, phenomenal rebound and continuation from the coronavirus crash earlier in the year. Having said that, since this year the market's really sort of been contained, also I should say in the past sort of couple of weeks the market has been contained within this sort of sideways range. So is the market going to continue higher, and what sort of trading opportunities have we got here? I think, if we look at this from a broader perspective, we're still within the context of a long trend, even though the market's sort of topping out at the top end here around 31,100. Things are still looking bullish. We've still got higher lows forming here in the price action, and the market's sort of pulling back into value areas at the moment. If we take a look at this on the mid time frames and take a look at the popular 4-hour chart, we can see the detail here a little bit more clearly. So again, if I just sort of zoom out a bit, you can see that we've got these 31,100. I've gone just above that where it sort of tests these previous two highs here, so around 31,115, 120 area. You can see that we've had now 3 tests of that zone, and on the third test the market again finding weakness on that price point. Underneath price we've got support around 30,750 and 30,680, so 2 areas here of key support. So the simple solution here is if the market gets underneath these support levels, we'll look for prices to retest that 30,200, which is the next sort of structure level that we have here in price action. If the market can find support back in here like it has many times before, we can look for a move back up towards the top end of the range, and if we can get above the range here, above the top end of the range, we can look for new highs in the Dow. Now in between here it's a little bit more tricky because there's no trend. There's the market's just sort of rebounding between these sort of ranges. So I think the best sort of plan is for intraday trading only. We tend to use the tick charts for that, sort of 200, 500 tick charts to trade these markets on the intraday session, and just look for those sort of rebounds and trading within the sort of ranges of the day. But overall this will become a lot clearer once we get a breakout of those 2 levels. If we have a look at gold, and again precious metals across the board, I'm liking these to the long side, and we have done for quite some time. So whilst our overall bias is long on these markets, doesn't mean to say that on the intraday price action we're going to have long opportunities. You can see that here the market has bounced off the 1800 level here quite nicely, and this happened last week. So we're finding key support at key technical structure levels. At the moment the market's now made a new high from this high point here, so that's broken above the 1850, hit 1873, and now we're sort of back into that 1850 area. Now these are all sort of very technical levels where the market has tested multiple times in the past. So the way I look at this here is if price can actually find support here at that 1850 price point, if you have a look at the 4-hour time frame, we can see the levels a little bit more clearly. So we've got 1850 here that the market is finding support at the moment. If the market can find support here, the next structure points is 1860. Above 1860 we've got a trading window there to 1873, and you can see that every time the market sort of takes these levels out, it pretty much goes to the next level. Now if we can't find support at 1850, then look for 1825 to be retested, and those are the sort of trading windows there that we're looking at and looking for trading opportunities within there. From a longer term perspective here, I prefer precious metals higher, and we are sort of biased towards the long side, but doesn't mean to say we wouldn't take an intraday trade to the short side here if everything set up. Now coming over to the currency markets and taking a look at some of the general strengths and weaknesses that we've been seeing developing here. Since the dollar has retested that 90 price point, it's starting to find a bit of strength in there, and from a longer term perspective we do expect the dollar to continue to weaken, but we may well get a bit of a support around this 90 price point, and that support may well last for a little period of time. Now if that happens and we see that strength in the relative support in the dollar, then dollar related sort of plays can be a little bit tricky. One that I think is probably going to be a little bit easier is the Kiwi against the dollar, and the reason being is that the Kiwi is particularly strong, and it has been particularly strong for a while. If we take a look at this from the weekly perspective, you can see that Kiwi dollar has had a very decent trend here. The market's just sort of pulled back into value areas and again finding support here. At the moment we've got sort of nice clear trading windows to the long side on these markets, and some very well structured momentum there too. If we come down to the daily time frame, again you can see the sort of reaction here where the market, and again this is probably the dollar related sort of volatility that's sort of pegging the market around the sort of 71 sort of 700 price point. But at the moment here we've got from a technical perspective we've got higher lows. We've had a lower low here, but now the market has now broken above and finding support above the sort of 71 700 price point. So again, as long as the market can find support above here, it looks like the path of least resistance is for continued strength in this market. Again, the Kiwi is strong today, and again if we sort of come down to the lower time frames, you can see that the turnaround here in price structure, we can see 72 here that the market has now sort of found support and resistance at a number of times. We've got a little trading window up here to 72.33, and then above that area we're then into sort of clear space and be looking for moves up towards that sort of 7300 price point. So we've got some fairly decent sized trading windows there. The path of least resistance at the moment looks towards the long side on this one, so we're keeping a close eye on strength here in the Kiwi dollar. So there's a few markets there that we're keeping a close eye on in the trading room at the beginning of this week. We'll take a look at these again on Wednesday and see how they're faring, and as amongst a number of other markets as well. So we look forward to speaking to you then, and bye for now.